Hi there, everyone, and welcome into this week's market update. Now, don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Alrighty, so at this point, guys, of the day, which is about 10-15 minutes after close, we have completely reversed. We initially broke through that 7,000 support level to close fairly flat. It's been a pretty wild week, guys, or a couple of weeks on our market. And overall, from the all-time high up here, back down to this support level here, we've fallen 8% in roughly a week and a half. So pretty extreme, right? So you can see this is definitely a huge amount of uncertainty and a huge amount of fear behind this movement. But in all moves, guys, even if this is the start of a downtrend, you know, the selling at the moment seems a bit overdone in the short term. So I would not be surprised to see a couple of upticks in back towards this 71, 80, 72 level. That's a very key level of resistance slash support. I think we'll probably come up and test that in the coming days. So, that reversal for you see a little bullish signal tomorrow morning, that to me says a push back to 72. So look, XJO, there's still plenty of support here. Things aren't quite looking as rough as what we're seeing in the US markets just yet. But if things do continue to sell down heavily over there, we'll probably follow through and finally break that support. So, there's definitely some bear market potential here at the moment. And I'll show you what I'm talking about. So let's get across to the S&P 500. You can see clearly, very clearly last night they broke, sending a bearish signal, okay, on the bar just down here. But it is heavily oversold, not to say it can't keep going straight away. But with the US futures being in the green right now, I suspect we'll see a couple of green sessions, right, before things continue lower or potentially continue lower. Now, the reason why I'm a bit more bearish, guys, okay, is have a look at this huge uptrend that we've seen since back in 2020 where we saw the COVID crash. The COVID crash looks pretty small in contrast to this trend, doesn't it? Okay, that was 50% wiped off the market in around a month and a half. Okay, so yeah, that was a very big move, but in contrast to this massive bull trend on the S&P 500 for the last 2 years, it doesn't look like much, does it? Okay, so that just really shows and enforces how bullish their market has been for the last few years on the back of stimulus. Now that stimulus is starting to be unwound, and not only is it starting to be unwound, we've got the threat of hyperinflation. And on the back of that, it's a supply chain based inflation as well, guys. Demand is up, but if we had the same supply as we had pre-COVID, we wouldn't be in this problem. Okay, so it is more of a supply chain issue. Okay, if that clears up, then inflation will probably come back under control. But let's face it, okay, there's a lot going on out there, and that may not happen as quickly as we want. So what are we seeing, guys? We're seeing a huge reversal pattern. What is this pattern up here for you technical analysis enthusiasts, right? This is a head and shoulders pattern. You've got your left shoulder, you've got your head, and you've got your right shoulder. That's how I'm looking at it, okay? There's a few other ways to look at it, but that's how I'm looking at it, and it's crystal clear to me on the weekly chart, okay? If you flick across here, then you've got your head up here, your shoulder, and your break, okay? So look, these technical signals aren't always perfect, right? We know that. But this one, it doesn't matter how you cut it, guys. You've got lower peaks, lower troughs now, okay? This is a downtrend by any definition, okay? So what's this head and shoulders indicating, right? Well, it's basically indicating that it could possibly fall quite a bit further back down near this 3,500 level. Not only does that head and shoulders indicate that, but the Fibonacci retracements also do that as well, okay? So your Fib retracement level at the moment is indicating a similar scenario of a pullback near 3,500, okay, as the next target. So it's on one Fib level here, okay? Well, that's only because I've drawn it there. But as a breakout pattern, even if I pull that up a little bit, it's still indicating a pretty big pullback. All right. So one way or the other, guys, look, doesn't matter how you cut it. Medium term technicals are suggesting bearish. The only thing I'm suggesting to you here, guys, and more times than not, when I've seen these head and shoulders pattern play out on stocks, okay, you don't get to see them play out on an index very often. I can say, very rare to see this on an index, guys. Okay. But what I've seen previously is a pushback up to test the neckline. Okay, so come up and test this support level as resistance. If you see the next bearish signal again, then that's just more evidence of a bearish market. What I'd be drawing in now or trying to identify over the coming weeks and months is where to draw a bear trend in. Okay, so at this stage, that sort of represents. So like I said, the coming days, I would not be surprised to see a push back up near 41.50, okay, and then we reassess. So I'm not going to pull the trigger and just go straight out bearish now. With the bullish futures we're seeing at the moment, I'd be waiting a few days, waiting for a fresh signal. Okay, so from a trading perspective, bear market, what exactly does that mean, guys? Okay, so we don't see this come around all that often, do we? Even in 2020, that market was in free fall that whole month, right? We didn't really see lower peaks and lower troughs. It wasn't just a slow and steady bear market. Well, no bear market's really slow and steady, but in contrast to what we saw in 2020, this is slow and steady, right? Because in 2020, the market wiped off 50% in a matter of a month, right? It was crazy stuff. Where we're actually seeing the potential for lower peaks and lower troughs, okay? So how do we trade this, right? As short-term traders, we always look for confirmation. We're constantly confirming the trend. So now I think that we've identified a downtrend. I'd be waiting for the market to come up a little bit, show a bear signal from the bear trend line or from resistance, and then there's your entry signal. It's as simple as that, guys, okay? I don't jump in on free falls like this, okay? Because it could just be a correction. Now, if the bearish trend line breaks, if resistance at 41.50 on the S&P 500 breaks to the upside, then we could very easily be starting a massive retracement movement. So you've got to keep an open mind, okay? In this environment, it's the mood of the market's changing on a dime, isn't it, right? 1 minute, things are quite bullish, they're a little bit more positive, and then all of a sudden, everything switches to bearish again. So I am definitely open-minded that this could just be another corrective phase and we could jump back to all-time highs, right? Don't corner yourself to a view right now. There's so much playing out there in the background and it will continue to flip around. So two things that run through my mind. I'm more open to bearish trades now that I've seen this reversal pattern. The other thing is I'm still open-minded to buy the stocks I like when they're on sale. Okay, so I'm still happy from an investment point of view to top up on miners. Okay, so BHP when it starts showing some bottoming signs, Fortescue when it starts showing some bottoming signs, keeping an eye on copper and iron ore to make sure they're not crashing as well. So not saying jump in tomorrow, guys. I'm saying that there is opportunity coming one way or the other, whether it be trading bearish, okay, and there's quite a few ways you can do that if you're not already, using options or mini warrants on the Australian market, your two easiest ways to short a stock, okay, and then also keeping in mind, in the back of my mind, that stocks are on sale. At some point this year, there's going to be huge amounts of buying opportunities across the board. Miners are the most simplistic, easy thing to go to soon. And then discretionary at some point later this year when interest rates have topped, that might be early next year. That'd be the next thing to take a look at. They will be on a huge sale, or they already are, right? Okay, so bear market territory, guys, it screams opportunity, guys. One for a massive retracement, and two for bearish trades, and three for buying stocks as an investment longer term. All right, so buy things that are safe. Microsoft, BHP, Fortescue, big names that you know are going to rebound when the economy rebounds. If we go into recession, who cares? The stocks are going to fall. But you know things like Microsoft are going to rebound. You know things like BHP are likely going to rebound. So you go towards value, things that have actually got intrinsic value. Then, when you think things are bottomed out and things are looking a bit safer, you can go towards a more speculative type of discretionary, high growth type stocks. Okay. All right, so that's where we're at, guys. Now, what's causing all of this? There's a few things, right? Well, you can't just all blame the central banks, but central banks are putting the pressure on by unwinding all that stimulus and by lifting interest rates very, very quickly, okay? What they're trying to do is get inflation under control. But if they go too much too quickly, what they're going to do is kill demand so much that they're going to send the world economy into a recession. And that's what the worry is. So it's a mixture between inflation inflation's getting too high too quickly because mainly, yes, demand's higher because we're coming out of COVID lockdowns and things like that, but mainly supply chain disruptions caused by COVID. So if we had the same levels of supply to where we were pre-COVID, we wouldn't be in this problem. We wouldn't be having these problems. Okay, so supply chain issues is what's caused most of this issue. Okay, but instead of fixing the supply chain, which the central banks cannot do, okay, it's outside of their scope, it's outside of their power. All the central banks can do is lift interest rates to dampen down demand. It's one thing to dampen demand, there's another thing to destroy it. And they could go too far. And that's why the market's on a knife edge constantly, because they're going, oh, they're going to go too far. Sell, 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 sell. Oh, no, it might be all right. Buy, 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 buy. Right? So that's where the knife's edge is at the moment between, fear and greed, is on a knife's edge of central banks are going to go too far because inflation is going to go too far. Or inflation might not be that bad. Central banks might not go too hard. Right, that's what people are flip-flopping around on at the moment. So the core issue is supply side inflation. That's the core problem. How do we resolve that? Well, we either bring demand down to meet supply, okay, or we fix a supply chain problem. Well, there's too many factors to fix the supply chain issue. It could take time. You got the Russia-Ukraine war. You know that's playing out in the background. And you know there's heaps of things happening around the energy prices on the back of that, agricultural prices on the back of that. But also you've got China coming in and out of lockdowns, okay? So that's the other big thing, is that how long is China going to lock down for? Are they going to be in and out of lockdown for 6 months? Is it just going to happen for a few weeks? We don't know, right? And we don't know what ramification that's going to have overall on the supply chain. We don't know what ramification that's going to have on demand for commodities like copper, iron ore, okay? So short term, there's big question marks on demand across the board, with interest rates flying up, with central banks unwinding their QE, all of that happening, plus China lockdown, plus Russia, Ukraine. It's just so much uncertainty, guys. It's just too much for anyone to really wrap their head around in the short term. But medium to longer term, guys, I'm still very, very, very positive. Whether it's going to take 6 months or a year to come out of this, don't forget that we've got a huge amount of infrastructure spending happening all around the world coming out of COVID. We've got governments around the world all spending big on infrastructure. That will kick in, right? But we just need this supply chain to clear up. We've got really strong job numbers, okay, here and in the US, okay? So job numbers are fantastic. There's a lot of good out there, but it's all being overshadowed by the supply chain inflation issue. So we've got to get inflation under control. Got to get these central banks reined in and under control. We can't see the interest rates go up like the bond market's suggesting, or else we will see markets go into recession, right? Economies go into recession, and that's the worry, all right? That's the worry. So I'm circling back, right? So it goes from inflation and central banks. They play hand in hand. And it's that dynamic between the two that's going to determine really what's going to happen over the next 6 months. But once this inflation gets under control, it will allow the central banks to back off, bring rates down a touch, and then the governments can come out and really start continuing to spend on infrastructure, spend big, and drive that economy stronger, but in a more healthy way. At the moment, the supply chain is not ready for what the world wants to do, okay? We've got to get that back under control, and that might mean that the US, Western countries might need to start onboarding. We might have to finally start manufacturing locally again, okay, and find ways of making that work. And that will help supply, but that's going to take a few years. So it doesn't matter which way you turn, supply chain problems aren't going to fix quickly, guys, right? This is the big thing, and that's what's probably going to keep inflation high for another 6 months or so, right? So look, I think there's more pain to come for the stock market, but overall, I'm still a massive bull, guys, longer term. Short term, I think we've got some pain for a long-term gain, right? I can't tell you exact time frames. We've got to lean on things like technical analysis to help us time these views. But short-term pain seems to be what's happening, right? This markets are oversold, so I think a couple of days up, and then we reevaluate, look for new bear signals, and get bearish this market if those bear signals come up. that's where we're at, guys. Okay, so not much else to say, but there's definitely high risk in the equity market right now on the face of rates going up too quickly, right? So this is a high risk environment. What I have already done, and what many people are looking to do, is making sure there's powder dry. And I've said this on these weekly views before. In this environment, when there's no uptrend in play, okay, we're in a sideways phase coming into a bearish phase potentially. You should have some cash on the sidelines to buy your core positions and average down. Okay. I've got core positions in my portfolio that I never sell because I've bought them at such good levels. But what I do, and because I'm such a believer in these stocks long term, every time they go on sale, I top up. Okay. And that's what I'm talking about, keeping some powder dry in this environment until we're comfortable that the market's bottomed, and then get back in and put that extra bit of powder back into the market. All right, so that's where we're at. Look, I'm not going to talk too much more, right? I think the writing's on the wall. The technical signals are played out. We can call this a bear trend for the US S&P 500 now. It's just a matter of reconfirming that over and over again, because like I keep saying, this market can change on a dime at the moment. A flip of the coin, a flip of sentiment, and all of a sudden everything changes, okay? So keep an open mind, but we are seeing more bearish signals to come. Okay. All right, leave it there. Thanks for listening in. Take care, and bye for now.